Hi friends, you're Rosario from Simply Options. Today's topic is going to be a hot topic. Hot topic which is extensively discussed in Twitter for the past 1 week. It's about drawdown. April actually did April Fool with many of the traders. Lot of traders are sitting with a good number of drawdowns. Some are with 5%, some are with 10, 15, some are more than 20% drawdown. Such is the market volatility in the month of April. It's applicable to me as well. Even our systems are it's in some sort of setback, but ours is little risk averse and risk defined. So for this month of April, we are flat to minor negative. But the point is, drawdown is inevitable in with all the traders. In this video, we will understand what is drawdown, what causes drawdown, how to cope up with this drawdown phase, and how to get over it efficiently. So this is what is going to be for the today's session. What is drawdown? So drawdown is nothing but the percentage of fall from peak of your capital to a point from which you again bounce back. So this is the textbook definition of a drawdown. Let us understand this with an example. Say you start a trading with some X amount of capital and you make profits and it grows. After a point you started making loss, it eats your capital, it depreciates your capital, and again from another lower point you again bounce back. So this is the normal phenomena where every trader goes through. The maximum point, the peak point where your account value is the maximum is called as peak, and the lowest point which you have fallen before bouncing back is called as trough. So what is drawdown? The difference between this peak and this trough in percentage terms is known as the drawdown. So this particular drawdown is faced by all the traders without any exception. But what is important is the percentage of drawdown. This the percentage of the difference between these 2 points, right? If these 2 points percentage, if it is within 10 to 20%, it's extremely normal. All the traders will have to undergo this phase at some point of their trading career. But what is not acceptable is any drawdown more than this particular point. Let's understand this concept with this particular table clearly. In this table, you can see the deeper your drawdown, the tougher for you to get back to your original position. For instance, you have lost 50% of your capital. Say you have started with 10 lakhs and you have lost 50% of your capital. Now what will you have? You have just 5 lakhs left in your kitty. To go back to the original position of 10 lakhs, now you must make 100% return. This 5 lakhs with this remaining capital, you need to make 100% return to bounce back to the same level of 10 lakhs. So that is what this table illustrates. At 50% drawdown level, if you need to go back to your original position, you need to make 100% return. Say if you are losing 90% of your capital, with remaining 10% of your capital, you need to make 900% return to bounce back to your original position, which is practically impossible. So drawdown is not bad, it's a good thing. It happens to all the traders, but what is bad is uncontrollable drawdown. So let us, in our next segment, let us understand what causes these drawdowns. Now let us understand the causes for the drawdown. There are several causes for the drawdown, but let me list the top 3 or the most generic ones. The number 1 reason is 1 or 2 bad trades. Generally this happens when we trade without a proper trading plan or proper trading structure. But that trust me, even for a professional traders, 1 or 2 trades will happen in that manner. So we are bound to take that hit of 1 or 2 trades. Number 2 reason is revenge trading. So the thing is, losses are inevitable, losses are part of the trading, but if you try to recover the losses as quick as you have lost that money, the probability of you losing even more is high. So the revenge trading is also a big no. That also is one of the causes for the drawdown. The number 3 and most common reason for drawdown is the market condition. That was a classic example in the month of April, because the market was extremely choppy. It didn't give any clear trend, be it uptrend or downtrend. The trader will be capable enough to capture the trend with some indicator or rule based system. But if the market is extremely choppy, it indicates long and then again going down. Then if when we try to capture the downtrend, again it is going up. So those kind of market volatile conditions, it's a tough period. Everyone has to undergo the drawdown. Now in the next segment, let us see how to cope up this difficult phase and get over it in the best possible manner available. Now the final segment, how to cope up with the drawdown. Before understanding how to cope up with the drawdown phase, what are the effects of the drawdown? Effects of the drawdown on any trader will be anxiety, depression, lack of confidence, and some might think why it is happening to me alone, why I am alone facing losses. Trust me, it happens with every trader, and these sort of human emotions are very common even for a professional trader who has already seen a pile of profits. So this is something which is not to be worried. What is to be worried is what is your reaction to this drawdown. Now what do I mean by what is your reaction to the drawdown? It's how do you cope up with this drawdown. Let us understand the best possible thing to do and what is commonly done. We'll discuss both elements. First thing which we need to do is we need to evaluate our trade logs. We need to understand what went right, what went wrong. If the drawdown is because of our bad trades, bad trade meaning trading without any specific plan, just trading ad hocly. If it is because of those reasons, or is it because of revenge trading, if the drawdown is because of these reasons, first thing we need to stop those things again. Should not repeat those mistakes again and again. That's the first thing which we can do. Number two, however, if you are trading with any particular trading setup or any particular systematic trading, it can be rule based, it can be indicator based, it can be chart based, whatever. If you are following any particular trading setup and if that setup is at a drawdown stage because of the current market condition, the ideal thing to do at this point in time is to continue the setup religiously without halting or jumping over to some other strategy. I'll tell you why. Because all the reasonable constructed strategies will have a good efficiency, it will be profitable over long term. That's guaranteed. But what is tough is all strategies will not perform all the time. Each strategy will be having its own efficiency. For given market condition, it may give you exorbitant return or it may give you a good number of drawdown also. So what happens when you halt a particular trading setup and jumping over to a different setup, you may get stuck with the loop on this jumping loop. You go to some other system that goes through a drawdown phase. Again, you think this is not for me. Again, you go jump back to some other system or some other tips and trades. Again, that setup also is going through a drawdown phase. So you'll be continuously jumping setup by setup. So your whole intention of controlling the drawdown will get defeated actually by jumping over to a new system. So if you are following one system which is properly backtested and it has its edge, if you have understood, and its correlation with your investment, all that you have analyzed, only you are starting a strategy, right? If you are starting that particular strategy, you should not halt for this temporary drawdown phase. This is the first thing which you can do. And number 3 reason is, while constructing the strategy itself, you may consider constructing 2-3 strategies which is uncorrelated with each other. So one gives profit, one is neutral, the other one gives loss. So your overall portfolio will be always in a controllable drawdown manner. But once you have constructed a portfolio with several strategies, you should not stop and halt and jump in between. That's the overall fair point. So these are the few key points which I thought I'll share in this particular moment where most of us are in some sort of drawdown phase. I hope these points were useful for all of you guys. So this is my, it's out of my personal experience and thought process. Anyways, subjected to your portfolio and your system, you know better, and you may consider your financial advisor before taking any meaningful action. We will definitely connect with one another useful video. Thanks for joining us in this video. Thank you. Cheers. Goodbye.